Microphones are on. How you miss the music. Yeah. I totally get that, Rob. Totally get that. Guys, welcome back. Great to have you. Hope everybody had an amazing holiday. Hope none of the yuck going around got you. I know my brother and his whole family got the norovirus. I got corona, so as much as I wanted to be active and fun over the holidays, I just sat around, watched a lot of TV. It's okay though. Guys, I'm excited, so excited to be back to work. Something's wrong with me. I'd rather be working than doing nothing, so I'm glad to be back, glad to be here, and glad to be doing the same thing that we do. We're gonna talk about advantages, and we're gonna talk about all the things that make the world go round. Good morning, Marty. Good morning, Erla. I'm pretty stoked on it. Gotta check news. Today is Monday, January 6th. Hopefully no riots, right? And at 9:30 a.m. we have FOMC member Cook speaking. They're not expecting a big impact on that. But at 9:45 there are the final services PMI, and that is medium impact news, which means that it has the potential to make the market bump and jump a little bit, guys. So for me, the one thing that I do every morning is I come to forexfactory.com/calendar and I just check those news releases. And then I, in my own personal trading plan, have resolved to never trade into medium or high impact news because it really does have the potential to make the market just spike. And as much fun as it is to try to predict the spikes, I haven't been able to do it yet. So just part of my trading plan. We do this every morning in the room. Everything that we talk about today is going to come from this nexgen-t3.com page, guys. We go to great lengths to make sure that there are absolutely no secrets held back from you. And my promise to you is that I will give you everything that you need to be successful with this software by the end of the day. Everything but the experience for it to become second nature. So the trading guide. Let's go to the software guide first, though, guys. Under the education tab, there's the software guide. This is really the NinjaTrader 8 how-to. Whether it is opening it, making it the most efficient, building new charts, turning on and off your trade plots if you want to see where you got in and where you got out. This also covers the screen capture program, which is a big part of this classroom each and every day. Closing workspaces, market replay, connecting to your live account. This goes through stops and targets, the ATM strategy, and it talks about moving and scaling your charts. All the little mechanical things that need to be understood, and that way you're going to be able to focus more on your trading rather than working your way around NinjaTrader. And then finally, the trading guide is where all the answers are. This is where everything that I talk about comes from. I try not to make anything up or change the verbiage too terribly much. Guys, consistency and repetition is a big part of what I do. And in the spirit of that repetition, each and every morning, the first thing that I talk about every day, sorry for all the scrolling here, is the high probability trade. Excuse me. And a high probability trade is defined when each indicator on every chart agrees for the rules for the trade. Guys, this is the best of the best. Hey, good morning, Miss Cindy. Happy New Year. This is when all the triggers are their strongest. This is when there's no termination conditions. When there's no trouble spots between your entry and your target. Guys, this is the best of the best. This is the one that feels easy. This is the one that creates all that confidence, because this is a trade that typically wins 70 to 80% of the time when you follow the rules. And there's an old adage that says that confidence is the memory of success. So the more success you can give yourself out of the gates, brand new users, experienced users coming back, the more success you experience, the more likely you are to commit to stick to that plan. And guys, the rules for the high probability trend trade, it's just a pattern. It's a pattern that has been proven to win more than it loses. And that's what gives us our edge, our advantage, getting into the market. The most important thing that this trade is going to do for you is it's going to teach you how to read your indicators. It's going to make it to where you can look at your charts and just understand whether or not you should even be attempting a trade, whether or not you have that statistic advantage. And chart reading is about 90% of your day. 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is not being inside of a trade, but rather waiting for the advantages to come to be so that you feel comfortable and confident taking that trade. 10% of your day will be acting upon those advantages, taking advantage and getting into the market. And what you're going to understand is that if you focus on becoming a chart reader first, it opens doors for all the trades that you see people taking in this room or in the other room. And you're going to understand where the market is likely to continue. And you're going to find yourself using this point for entries for those highest probability trend trades. You're going to understand where the market is likely to go. This is going to allow you to make good decisions on targets. And then finally, you're going to understand where the market is likely to stop. And these are what we call termination conditions. And termination conditions can literally stop the market cold, make it reverse. Termination conditions are these giant red flags waving to the Nexgen user saying, hey, no more trades into this area. This is where the market has the potential to bounce. And that's really the magic of Fibonacci. So we're going to focus on 3 rules. Let me get that laser pointer so I feel important. The high probability trend trade is only 3 rules. That's it. I love to try to complicate things. I really do. But we're not gonna. And these rules, these 3 rules, very easy to learn, very easy to recognize rules. When they're true, they create advantages. Hey, good morning, Wayne. And a trade is nothing more than the accumulation of 3 advantages, guys. Your first rule is strong trigger lines. This is going to provide you the advantage of momentum. Hey, good morning, Luciano. Happy New Year. Your second rule, make sure that you're not trading into any of those termination conditions, and that's going to give you the advantage of a clear path. These first 2 advantages, momentum and path, once you have those, you have the keys to the kingdom. You've got the golden goose, whatever cliche you want to use. Guys, momentum and path are the basis for everything. Momentum and path, that's the core. And when you have both of those advantages, guys, you have everything that you need to create a very consistent trading plan. We add the 3rd rule, and this is specific to the high probability trend trade, and this is your entry area. This is getting into the market where the market is most likely to continue with the trend. So I want you to focus on making sure that you understand momentum, making sure that you can identify a termination condition. And once you have these 2, guys, it sets you up for everything else. The other trades that Nexgen teaches, the other trades that I teach that I'm glad to talk about. But you'll find that I always go back to these 2. So give it a little bit of your time. These 3 rules are going to happen on only 2 charts. There are more chart configurations available. There's different style charts. Guys, we're going to use the Nexgen dynamic Renko charts. We're going to use a large chart and a small chart. And your large chart is going to lead the way. The large chart is going to tell you which direction you should be trading. The large chart is going to identify whether or not that advantage of momentum is present through rule number 1. And the large chart is going to define the areas that could be problematic through rule number 2. It's a very slow moving, it's a broad stroke of a brush, and it shows the overall opinion of the market. Once those first 2 rules are met on the large chart, I'm going to go to the small chart. This is my entry chart. And I made a point of writing entry chart above small chart. I don't want you to get seduced into trades because the small chart looks perfect when the large chart isn't giving those advantages. This small chart is going to take an x-ray of that 1 bar. It's going to refine that very broad stroke of the brush, and it literally pinpoints the best of the best spot, that area for entry. And this is going to allow you to reduce risk. It's going to allow you to increase your profit potential. And rule number 3 happens on that smaller, faster chart. We're using these 2 charts because as much as I love analogies, I'm horrible at them, but my brother came up with a pretty good one here. Who are you trading with and who are you trading against, guys? Your large chart is the big crowd. These are the men and women with the money to create trends, to create momentum. These are the people that react at those key areas. And the easiest path is just go with the large chart. If they say up, let's go up with them. There's a small chart or a small crowd, and that is your small chart. And these are the yahoos that fight the big crowd, that think they're better than them, that think that they can be more influential. And they create these little rifts in the matrix, guys, what we just call a pullback, a little fight against everything that these guys want. They fail typically 70 to 80% of the time. So the whole premise, the basis of this high probability trend trade methodology is that when you trade with the large charts momentum, when you trade with that direction and that area, guys, the small crowd fighting gets you back to your entry, to that point where the market is most likely to continue. And if they're failing 70 to 80% of the time, guys, that gives you the potential to win up to 70 to 80% of the time. And this is where it all comes together, and you will be able to pinpoint that area to enter that highest probability trend trade. So simplicity has always been my battle cry. Simplicity has always been my approach to teaching, because it feels like a lot to take in. And if you just take a deep breath and simplify a little bit in the beginning, what you find is you're going to get to where you want to be faster. So there's a step-by-step path to becoming a confident trader ASAP. First and foremost, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. I encourage new users, give yourself two options when it comes to getting into the market. Either your rules are met or they're not. Either you have a rules-met statistical advantage pattern that has been proven to win more than it loses. This is why you're willing to pull the trigger. And if those advantages aren't present, if those rules aren't met, I want you to just go ahead and commit yourself to sitting on your hands and doing nothing, waiting for the best of the best. Remember, this is a job. This is an investment. This is not just a video game where you get in and, hey, let's see what happens. Simulate and practice and learn these patterns and break the rules and mess things up and have mistakes. And guys, I can't tell you how important it is to mess things up every now and then. Hey, Happy New Year, Miss Jen. Nice to have you. Because what happens is the first step is posting in the room. So everything that you do, I want to see it. I want to see your entries. I want to see your exits. I want to hear your chart reads. I want you to write on your chart, hey, Mark, check it out. This is where I saw momentum, and this is how I felt about whether or not there was a clear path. And I got in here and I got out here, and do me a favor. Give me a little bit of feedback. Make sure that my chart read was correct. Make sure that my entry made sense, that my hold wasn't too long, or did I jump out too soon? And every time you post in my room, it's a private session. Every time you post in my room, you're going to get feedback on what you see and what you did and how you did it and where you did it. And as long as you tell me what you saw and why you did what you did, guys, we're going to have a great conversation and just keep working together to get you where you want to be. So post in the room, and don't be afraid to post losers. Losers are where the magic happens. I have shown my brother no less than 1,000 losers, and every one turns into a great lesson to make me a better trader. Guys, I promise I'll do the same for you. And then we're going to simplify. I'm going to put a plan in your hot little hands, the KISS plan, that's designed to optimize your chances of success with this high probability trend trade. We're going to keep it very basic. We're going to learn the looks. What does it look like? Because all it is patterns. And when you know the patterns, they jump off the screen right at you. You've got to learn them so they look easy. And that's the second part to getting to where you want to be ASAP, is use this spreadsheet that I drop in the room every day. And I'll drop it in the room right now so you guys can liberate it from the chat box, put it on your computer, and use this resource, because the first tab is your trade journal. I want to see everything you do, but I want you to go back and look at the things that you've done. So this first tab gives you the ability to put every trade, what kind of trade you were taking, whether or not you had those advantages in place. And then I think the most important part, it sounds a little egotistical, is put the feedback from class, guys. Because what you're going to do each and every morning is you're going to come back and you're going to study those trades that you put into the spreadsheet. And you're going to look at them. And you're going to ask yourself, what worked and what didn't work? And you're going to start to recognize the things that are bringing you success, and you're going to begin to recognize the things that might be pulling that success out of the equation. You're going to see a very definite correlation between the trades feeling easy and you staying relaxed when you're following the rules, the stuff that works. And you're going to feel that weight of it being forced and things making you nervous when you know you're breaking your rules. You'll find yourself moving stops. You'll find yourself adjusting targets because you know you don't have the advantages. And if you go through and you keep looking at these, guys, every morning, it takes 3 to 5 minutes to look at what you did yesterday. It's going to prepare you for the day. It will accelerate the learning. So you'll start to see into a termination, into a termination, into a termination. Holy crap, this is my pattern that's costing me. So every morning you wake up and you say, all right, no trades into those damn lines. No trades into those areas that can stop the market. I keep taking losers. So that's the first tab. The second tab is the basic rules. And these are the rules in green for the high probability trend trade. And it's also the rules not being met in red so that you know the difference, recognize the pattern so that they become easy. There's the client trade section, which is in the green section, almost 400 pictures that I've stolen from you guys. I'm not proud of it, but I did it. I have taken your pictures because you took the perfect short, the perfect long, the perfect trend trade, and I've put them in here as a study guide for all the new users coming through. There is the high probability trend trade entry sequence for both long and short. There's some very, very basic management that's designed to pull a lot of the emotion, a lot of the fear, even the greed out of management as you begin to learn the software. I've begun refilling the NASDAQ. And guys, I'm going to share with you right now, I had an epiphany over the holiday. So I trade exclusively NASDAQ. I trade it pre-market and I trade it after class, guys. I'm never in front of the NASDAQ when the NASDAQ opens. I had the opportunity, the first time since probably last January, last December, to be in front of the NASDAQ at the open. And it is my opinion, not at all fact, but it is my opinion that it is financial suicide to try to trade that market off the open. I'm one of the fastest chart readers I've ever met, and I can't keep up with it. So, that being said, I teach on crude oil and I teach on the S&P. I love the NASDAQ pre-market. I love the NASDAQ after noon Eastern because it flows real nice. During the market, I can't move things fast enough. I love the NASDAQ too, but I'm just sharing that. And that's for the new users, guys. If you don't know exactly what you're looking for and when you're looking for it, NASDAQ is going to get you, but there's some good ideas there. There's a lot on management because your management plan will grow after 1030. Exactly. That's what I noticed, Cindy. And then patterns that repeat themselves. Here's the cool thing. Once you can identify momentum and once you understand path, these things are going to jump off the screen at you. You're going to begin to see your trade. Wayne did a great example of it this morning in the room, and when we go back and look through charts, I'm gonna talk about that. And then you're going to see these patterns and you're going to come up with your trades. You're going to come up with your plan once you begin to recognize these things. And that's what the final section is. This is the my personal trade setup looks. You're going to say to yourself, this is what I'm looking for. This is what it looks like. Here's a picture. Here's how I'm going to manage it. Here's some patterns that may affect my success rate. And guys, fill this section out. Make it look like the client trades. And what you'll find is that the patterns do become easy. The market does appear to slow down. So that's your path. It's been the same path for as long as I've been with Nexgen. This is the exact same things that John Novak told me to do when I started learning the software. And the cool thing is, I'm going to talk about this. After class, guys, market replay. I was talking to a buddy of mine over the weekend, and one of the things that so many people do is once they think they have it, they stop practicing. They stop going back and practicing their patterns and practicing their entries and looking for reasons to make more or less. Guys, market replay, go back and retrade every day that you trade. Double your repetitions, get to where you want to be faster, fix your mistakes, skip the trades you shouldn't have taken, take the trades that you shouldn't have skipped. And then take pictures, guys. Take a lot of pictures. Take a lot of pictures. My 2024 picture count was just under 8,000 pictures. Just under 8,000 pictures, guys. The more pictures you take, the faster you're going to get to where you want to be. The more of those pictures you drop in the room and get some feedback on, the faster you're going to get to where you want to be, guys. And repeat this process every day until you always take the correct trades. And guys, if you're always taking the correct trades, rules met, well, you're guaranteeing yourself that you can win. And that's when you go test your plan. That's when you go see what you can do in a live market. So, without further ado, let's learn some rules. Let's start on the large chart and let's talk about strong trigger lines. This is rule number 1 to give us the advantage of momentum. If you have a question, interrupt me. If you need something, interrupt me. If something doesn't make sense, interrupt me, guys. This is a discussion, not a lecture. We're going to let the large chart lead the way, and we're going to start by letting it define which direction we should be looking for rules to be met. So, if the background is green on your large chart, it's up. We're looking for rules to be met for high probability trend trades long. If the background is red, it's down. We're looking for rules to be met for high probability trend trade short. Guys, this is the easiest way. Don't fight that trend. It rarely works out. And then momentum is a universal look on no matter what chart you're looking at. Whether it's a big chart, small chart, range chart, month chart, stock chart, futures, options, crypto, I don't care. Strong triggers is always the same look, guys. And when the background is green on your large chart, both your small and large triggers need to be green as well. And this is a little safeguard because when everything matches, you have the potential for strong triggers. But strong triggers means that your small triggers have broken up and above the large triggers. There's a separation. Picture scissors that have just opened. Your large triggers need to be wide, angled in the direction of the trend, guys. And when I get that open scissor look, when I get that separation between the smalls and the large, this is when the odds are favorable for the market to continue up. In a downtrend, smalls are red, large are red. Smalls are below the large, the scissors are open, the space is there, the large are wide. Guys, this is always the look of strong triggers to the downside. And when I have this look, the odds are favorable for the market to continue down. Odds favorable momentum. You're going to see it in class all day long. Odds favorable momentum, OFM. You're going to see it annotated on charts, guys. This is your first advantage. This is the look that pushes the market in the direction of the trend. This is the look that it takes typically to break those key areas where the large crowd is reacting. And guys, this odds favorable momentum, it'll cover a lot of the mistakes that we all tend to make as new users because it's hard to stop that freight train when the large chart says go fast. If the scissors open is my advantage, when the scissors close, my advantage is gone. This is what we call the weakening of the large triggers. When your small triggers work their way inside of the large triggers, anything can happen up or down. I'm a huge fan of language. Odds favorable, strong, weak, anything can happen. Know the difference between the two. Commit to one, guys, because that momentum, it pushes a lot of the trades that we take. It sets us up for success in a lot of the trades that we teach. So strong triggers typically doesn't happen all day long. You could look at a large chart, and this is about a 4-hour snippet, I think, about 4.5 hours. And you can see if we just go left to right, there's separation and strength, and the market pushes down. We get that weakness. Anything can happen. ACH is how it's annotated here. And that's where the reversal comes from. That's where the market decides to change direction because it no longer has the momentum to push it down. Well, from that reversal, there's that odds favorable momentum, OFM. These tails that you see on a large chart, this is one bar endeavor, right? Remember, we're refining this with the small chart. You'll be pinpointing precisely where that tail is most likely to form, and that becomes your entries for the highest probability trend trade. You can use these tails to go back and study this pattern. So with odds favorable momentum, if my large chart produces a tail, understand that most of you took an entry right at the base of that tail because rule number 3 puts you into the market there. And some of you will ride that momentum all the way up to weakness. And when you get weakness, there's another reversal, creates momentum, another tail. And then we get into where the colors don't match. And this is why I reference the colors. Because if my large triggers are down and my small triggers are up, if these are red and those are green, I don't have momentum. The colors need to match. If my background is green but my triggers are red, I don't have momentum. My colors need to match. And guys, this is a transition. This is where the opposing large crowds, the buyers and the sellers, they're fighting. They're duking it out. They're going after it. And you don't have to try to predict, and you don't have to try to guess which side's going to win. This is where you go make a sandwich, sit on your hands, call your mom and tell her you love her, and wait. Because one of the sides is going to win, guys, and they will produce odds favorable momentum, and you will find your opportunity. You're going to realize the more you study this pattern, the more you recognize these rules, that the opportunities are coming, and sometimes you have to be patient to wait for them. So, guys, that's rule number one. Let's go to just for grins, a large chart, and see if it happens. So here's crude oil. There's strong triggers. The market's pushing up. It broke areas, and look, there's a tail. Maybe an opportunity to find a long trade. And then we get that weakness, and it happens to be right at key areas, and sure enough, a big push down. And then we get momentum up. And guys, this just repeats all day long. We're just learning how to be patient to wait for the best of the best. Are there any questions about momentum? Any questions about that separation, the look? Guys, you can go back on a large chart. This is one of the beautiful things. You have 10 days worth of data. You can just go back and say, oh, look, there's strong triggers and there's one of those tails. And there's weak triggers, right? And sure enough, the market reversed. Over and over, guys. Go back, study these looks, learn them, commit to them, and it becomes easy when you get to a live market. So this is crude oil in the moment. My large triggers are up, they're green. My small triggers are down, they're red. Do I have strong triggers? Is rule number one met? Do I have that advantage of momentum currently in crude oil? Absolutely not. So my highest chance of success comes from doing absolutely nothing in the moment. It's almost seems too easy, doesn't it? All right, so here's the S&P. The background is red, but both large and small are green. And look at this. This is the most current bar. Guys, you are watching the evolution off of a termination condition of momentum growing. And if this market continues up, these small triggers are going to continue up with it. And right now, all we're doing is we're holding, we're waiting for those small triggers to get above and away from the large triggers to give us rule number one. Does that make sense, everybody? The colors match, but I don't have separation. I don't have the triggers open or the scissors open yet, so we're still in a holding pattern. And that's rule number one. You either have momentum or you don't. Once you have momentum, got to make sure that there's nothing in the way. We got to make sure that we're not trading into those key areas, that we're not trading into an area that has the potential to stop the market. Guys, termination conditions are Fibonacci-based indicators that have the potential to reverse the market. That is the clinical definition coming right out of the study materials. I just say they're horizontal lines on a large chart. And guys, there's a very specific set of lines that can behave as termination conditions. There's a divergence high, which is this magenta line. It lets you know that there's a loss of momentum right at this pivot. There's divergence lows. It's a cyan line. It tells you the same thing. The market went down and up. Momentum didn't follow. Hey, here's a blue line, a cyan line that's going to behave as a line in the sand potentially. We're going to use red Fibonacci resistance, and when the market is trending up, it's an area that may stop it, may create a bounce, might reverse it completely. We're also going to use Fibonacci support, these blue lines, and it does the same thing as resistance the other direction. If the market's trending down, it may stop it, may create a bounce, it may reverse it completely. And then finally, yellow one-to-ones. Yellow one-to-ones, guys. Make sure you write down yellow. And if price is trending up, they may behave as resistance. And if price is trending down, it may behave as support. And guys, you're going to see these little pink one-to-ones on a large chart. And this is just, it's a part of the template. It's something John Novak put in. If you're a crude oil trader, if you are an S&P trader, these do not count as termination conditions on the large chart. They don't count as entry points on the small chart. These are from fluctuations that are too small to be impactful to the point that they work their way into the rules. If you're a NASDAQ trader, pay attention to them. So The areas that may create a bounce, that may stop the market, that may create a reversal, I'm going to drop this picture in the room for you. I am going to give you this PowerPoint that you can study it, but learn which ones behave as termination conditions. And then if these areas are where the large crowd may react, where they might make decisions, right? The buyers could buy, the sellers could sell. The recipe for identifying a termination condition is two-part. And the first part is allow price to get to the area. Let those dynamic Renko bars get to Fibonacci resistance. Let those dynamic Renko bars push down to Fibonacci support. Let price reach the area. That sets off the decision-making process. And then all you have to do is ask yourself, where are my triggers? If price reaches resistance and my triggers remain below, this is a termination condition. This may stop the market. It might create a bounce, guys. It could even reverse it completely, and we call that a strong top if those large triggers roll from green to red. And a strong top is the precursor for the highest probability trend trade short you could ever take. The strong top, no triggers through termination, is rule number one for multiple trades. So it doesn't necessarily mean go short, but if price reaches the area, the triggers remain below, it's okay to sit on your hands and do nothing. Wait for the reaction. It's either going to break or it's going to reverse. Price pushes down, reaches Fibonacci support. Where are my triggers? My triggers remain above. Sit on my hands and do nothing. No trades into the area. It's a termination condition. It could create an untradeable bounce. It could break, or it could reverse the market completely. And if it reverses the market completely, well, then now it's a strong bottom. And that strong bottom, that's a new word, sets you up for the highest probability trend trade long you could ever take. A strong bottom sets you up for a high volume area trade, for the white bar, for the momentum trade. So strong tops and bottoms are these impactful decisions right at key areas that reverse the market, and we're going to look for opportunities going the other direction after them. That is your termination condition. That is a line that could stop the market. And look at this. Price reaches Fibonacci support, the triggers don't break, and look at the bounce. Price reaches yellow 1-to-1s, the triggers don't get above, and look at the bounce. Support, weak triggers, look at the bounce. Over and over, there's a divergence high. Guys, it's not the one time that the market stops, it's how often these lines create untradeable bounces. It's how often they reverse or create deeper retracements and problems for you guys. It's not a difficult recipe. What you have to do is learn to trust it and not trade into it. But they will break. Areas break all the time. If they didn't, we'd be caught in a really tight little range. What's it look like when an area breaks? Well, both my small triggers and my large triggers must get below support for support to be broken. Both my small triggers and my large triggers must get above resistance for resistance to be broken. And what you'll find is that from the point of that blue support being a termination condition, price reaches it, the triggers remain above, until it's actually broken may be 10 bars, it may be 15 bars. And this is that 90%, this is that patience. Waiting as a brand new user to have that clear path, to get below support so it behaves as resistance, to get above resistance so it behaves as support. And very often the difference between the successful traders and the traders that have challenges is the ability to do nothing when there's simply nothing to do. So brand new users, I want you to keep it very basic. It's either a clear path or it's a termination condition. And it's either a clear path or it's a termination condition. And it doesn't have to be any more difficult than that. It's either a clear path or it's a termination condition. And what this is going to do for you is it's going to keep you from trading into areas that create these big ugly bounces. But what it also does for you, and let me ask real quick, is everybody okay with that? You've either reached a termination condition or you've broken it to give you a clear path. Or it's reversed and give you a clear path the other way. This is the most basic approach to using these amazing lines on your large chart. Once you know the difference between clear and term, it opens the door for the second trade that I'm going to give you this morning. And this is what we call a 50-50 trade, guys. This is going to be your first medium probability trade. Remember, all we've been doing so far is talking about a high probability trade. The medium probability look is trading the potential of those areas to break. And when 50% of my triggers, the small, work their way through that area, go beyond that blue Fibonacci support, but my large triggers are still above, 50% or below, 50% or above. Guys, if I have odds favorable momentum, this look lets me know that the area may break. And I'm going to give you a plan to be able to take a short trade based on that potential. But because the path isn't clear yet, it's only medium probability. You will need to manage a little more aggressively. And that's just a fact of life. And there will be times when your path isn't clear because of stacked areas, because of multiple blue fibs, divergence lows, one-to-ones, whatever it may be. And this is 90% of your day. And the more a market consolidates, the more fibs tend to be there the next day. And you have to be patient, guys. The futures markets trade about $220 billion an hour, trillions every day. It takes $400 a day to be in a six-figure income. That's it. 400. You don't need to be in every move. You don't need to be the first one in or the last one out, guys. The easiest trades, the highest probability winners come from trading away from fibs and using that next fib as a key area, letting momentum push it, making sure there's nothing in the way. And that's rule number 2. And guys, this is the core. This is the foundation. This is the basis for everything that you're going to do with this software. You're going to be able to identify momentum through strong triggers. You're going to look at that large chart and you're going to say to yourself out loud, this is a market that has the potential to continue in the direction of the trend. You're going to look at that large chart and you're going to say to yourself, I do not have any termination conditions, which means that I do have room to my targets. I have a clear path. And with these two advantages, guys, I have to find a way into the market. My first way in is the entry for the highest probability trend trade. And it's so specific, it's so precise that you'll use a limit order to buy or sell a pullback. And if you remember, that pullback is that little push by the small crowd. You're going to use a limit order to buy or sell at an area. Fibs, mid-bands, or yellow one-to-ones. But I want those areas to be inside of triggers because triggers define where the market is most likely to return, where that retracement is most likely to go. And there's a look called favorable large triggers. And it uses the small chart large triggers and it superimposes the large chart large triggers onto the small chart for entry. And when those large and synthetic triggers are overlapping one on top of the other like two snakes riding piggyback, this is the best of the best look. This is defining precisely where those dynamic Renko bars are most likely to return. And then when there's areas inside, fibs, mid-bands, yellow one-to-ones. And once again, I'm going to remind you guys, don't get sucked into thinking that a divergence line is an entry point. Don't get sucked into thinking that pink one-to-ones are an entry point. It's fibs, mid-bands, and yellow one-to-ones, and they need to be inside of triggers. And this is how we define our entries. This is where the precision comes from. This is where the reduced risk and the higher profit potential comes from. So to define it, to get your entry areas, we start with having the rules met. If I have momentum on my large chart, if my path is clear on my large chart, guys, it's going to look like this. There's that large crowd getting everything done. So I just need my small crowd to fight so that I can pinpoint their failure, so that I can precisely identify where the market is most likely to continue up with the large crowd. And I'm going to do that by waiting on a reversal bar on my small chart. When the rules are met on the large chart, my small chart is screaming to the upside. I have momentum, my path is clear, and everything says up, and I'm actually going to wait for it to go down. I'm going to wait for a reversal bar. This red bar after all of those green bars that signals the beginning of the pullback. And I don't know where the pullback's going to be, but I can use those trigger lines, large and synthetic, to define the area where it's most likely to happen. So the first thing I do at the time of the reversal bar is I look at to the top of my triggers, to the bottom of my triggers, and this defines where those price bars are most likely to return. But that's not my entry. I need fibs, mid bands, or yellow 1-to-1s inside of those triggers. And you can see that there's a mid band inside of the triggers, and there's yellow 1-to-1s inside of those triggers, guys. And this creates a window of opportunity. We call it the woo. And this blue shaded box, from the highest point of support to the lowest point of support inside of those triggers, guys, this defines where the market is most likely to continue with the trend. This defines where the small crowd is most likely to fail. And because of the momentum on the large chart, because of the clear path, nothing to bounce off of on the large chart, your limit order goes right at the top of that window, a tick or two above the highest point of support. This is your entry for the highest probability trend trade. Any of those lines, fibs, mid-bands, or yellow 1-to-1s, beyond the trigger lines, beyond the correction point, below them for a long trade, guys, this is outside of the large triggers. This is outside of the window. This is where the market should not go. And by defining where the market's most likely to continue, we understand where the market should not go. This is actually going to be your initial stop placement, where you say, wow, my advantage is gone. I don't want to be in this trade anymore. So in a short trade, when the large chart says down, when the large chart has momentum, when the large chart has a clear path, we're going to wait for the small crowd to fight. We're going to wait for that reversal bar, that up bar, after all of the down bars. When I get my reversal bar, let me find my triggers, large and synthetic, because this defines where the retracement is most likely to go, where price is most likely to correct. The areas inside define where it's most likely to bounce and continue with the trend, where the small crowd is most likely to fail. So reversal bar prints, I find my triggers, and then I look inside for an area. Fibs, mid-bands, yellow 1-to-1s. I have one area inside of triggers here, guys. This is a magical moment. There is one line where the market is most likely to continue with the underlying trend. There is one line where the small crowd is most likely to fail. I'm going to activate a limit order about 2 ticks below it. And if they come up and get me, guys, I'm in a short trade with all of those advantages. Anything beyond the triggers, above the triggers, this is where the market shouldn't go. This is beyond the correction point. This is beyond the bounce point, guys. This is where your initial stop will be placed. This is where you're going to say to yourself, if the small crowd has it in them to get through the triggers, to get through the lines, I don't want to be in this trade anymore. You know I can, Cindy. Let me go find you a couple individuals. And then I also share this PowerPoint that I use every day. I share this every day and drop it off in the room for you. Here, I'll make it easy for you. There is both directions, both long and short in one picture. And guys, all we're doing is we're defining where the market is most likely to continue with the trend. We're defining, oh, I love you back, Cindy, where your highest advantage comes from. And brand new users, remember when we talked about those tails? We'll talk about those. I want to show you a pretty cool phenomenon. New users, even old users still do this. I've done this. There are 3 entries as you work on your high probability trend trade that are likely to happen. And this is why I like you to share in the room. We can talk about all of them. The first entry is the, oh my gosh, they're going to go without me. I better jump into that market and hope they don't pull back. And that's the first entry, guys. And if your stop goes where the market shouldn't, the risk is huge on this entry. And the distance to your target is virtually nothing. And this is a very emotionally charged entry. And if you take it on accident, whoops, my adrenaline got the best for me, you've got to exit on that reversal bar and go through the process of pinpointing. The second one, and this is really common, is it almost gets you into the market. It almost hits your limit order, and then it looks like it's going to run without you, and you start to see the market go up. Guys, remember, we're entering on a very small chart, on a very fast chart. There's a lot of fluctuations on this chart, and it's not uncommon to see the small chart bounce up and down on the way to the perfect entry. Very often I see new users getting in. They get in at that high tick. Fear takes over, and all you have done is increased your risk, and shorten the distance to profits. So we're learning trust with the methodology. We're learning to believe in our hearts that I need to wait for the areas inside of those favorable large triggers, because when I do, the distance to where my stop placement is the least. I have the smallest risk on this trade, and the distance to my target is the most. And I have the most profit potential by waiting for the correct entry. And that's what the great entry does for you. And initially, my stop is here where the market shouldn't go. If I get a reversal bar in the direction of my trade, and this is all on the plan I'm going to give you, I can actually reduce my risk a couple ticks below that reversal bar. And it's not uncommon to see you guys take the perfect trades, to have the best of the best entry, the highest probability entry. And once you get the reversal bar, only having 2 or 3 ticks. And even if it doesn't work out, you're losing $37, $50 to $45. You're not losing $200, $300, $400 on a trade because you understand the pattern. You understand exactly what it means to have that great entry, and you've gone through it, taken pictures, posted in class, and you believe it. And once you believe it, that's when the magic happens. So you have to learn it. We talked about those tails on the large chart. If you go back on your large chart and you have strong trigger lines, and you go back on your large chart and there's no termination conditions, and you see one of these tails, circle it. We're not looking for trades, we're looking for patterns. Circle it, or square it, I suppose. If that square shows up on the small chart at an area inside of triggers, guys, this is your pattern. This is your look. This is the best of the best. You want to take a picture of that. You want to commit this look to memory. You want to say to yourself, this is my trade. Maybe go back to your spreadsheet. Go to your plan and say, this is everything that I'm looking for. This is the perfect trade. Maybe say something clever, like don't miss it, and then come back and look at it first thing in the morning so you know what you're looking at for the day. But guys, that's it. That's your high probability trend trade. That is the best of the best. That is your greatest chance of success as a brand new user. This is how you study it. And I told you guys I would give you everything that you needed to be successful. Let's just, for grins, let's circle a tail when that area had the potential to break with momentum. And let's see what it looked like on a small chart. Did it fit the rules? Holy crap. Odds favorable momentum. It's coming from a termination that reversed the market. The divergence high had the potential to break, and it pulled right back to support inside of favorable large triggers. Can you guys give me a why? And this happened 4 minutes ago. Guys, I don't have to cherry pick pictures and say, man, I hope they believe that this happens from this picture that I took 3 years ago. This is it. That's your trade. That's your pattern. That's your look. This is everything that you need to be successful with the software. So let's recap and give you some stuff. We learned the rules. You guys can simulate, you can practice, you can post in the room, and you can ask for feedback. I gave you the spreadsheet. You can take pictures, you can post them in, you know that you need to review them. Well, Mark, I'm just learning, I'm new. I don't know what to do. How about this? This is what I'm going to give you in a whole zip file, guys. It starts with this, Chart Reading 101. To get to where you want to be, to get there quickly, you've just got to recognize these patterns, guys. And the easiest way isn't to go back and find trades. The easiest way to learn how to be a chart reader is not to be a trader. Go take pictures. Learn these individual rules. So take 25 pictures of strong triggers, 25 pictures of weak triggers. Take 25 pictures of a clear path when the triggers break, and take 25 pictures of terminations, and get your entries, guys. And take those pictures and get them into the basic rules section. And I've given you an amazing head start. But the chore, if you will, isn't just to take the pictures. You need to annotate them. So if I'm taking pictures of strong triggers, I want to annotate on that chart. There's separation. The scissors are open. The odds are favorable. This is momentum. And if you do that for each individual picture, guys, the time that you spend typing and analyzing and putting it into your spreadsheet, you're creating a connection between a look, just a pattern, and what that pattern means to you. So you should be able to go through any one of these strong triggers, and it's going to look the same on every one. Whys, tell me what you see. Smalls are above the large. Odds favorable. Rule number 1, strong triggers. This is momentum. And guys, you're committing this look to memory, and you're going to do the same for weakness. And you're going to say, there's no reason to go short with weakness. Anything can happen. There's no reason to trade into a line. It could stop the market. And it's pretty outstanding. If you go through this and you take 5 pictures a day for the next 5 days, you're done. You're done with the task. 5 pictures of each. That's 25 pictures a day, guys. I take 40 or 50 every day, and I already know this stuff. You're never going to make the mistake of missing momentum or trading with weak triggers or trading in determination conditions. And eventually, you're just going to piece this together. You're going to piece together momentum, clear path, and entry, and that's what's going to create your trade. So don't skip the study, guys. This is what's going to pay dividends. And then I'm going to give you the high probability trend trades. Oh, thanks, Andy. Happy New Year. So this is the high probability trend trade checklist. I'm giving you guys all this stuff that I'm sharing with you right now. And this is just a checklist to get you into the market. And since you're brand new, let's make sure you understand what it looks like and what it says. So is the market coming from a strong top? It's that termination that reverses the market. Do I have momentum, or am I working with weak triggers? Do I have a termination condition? Does it only have the potential to break, or is the area broken? And how do I define my entry? Where does my entry go? What am I waiting for? Where am I putting it? Guys, this is everything that you need. So as you simulate and practice, print this out. Follow it. Ask yourself these questions before every trade. Say it out loud. Scare your pets. And I've never had anybody in the history of this checklist do worse than 70%. I have never had anybody follow this checklist to the letter and do worse than 70%. Guys, 70% is like 32 flavors of kick ass for the day traders. Learn it. Commit to it. And then finally, let's have a plan. Whoops, sorry. I'm giving you the KISS plan. And the KISS plan is your first trade, guys, your first plan. This is the one that's going to help you learn to read your indicators. This is the one that's going to teach you to manage. This is the one that's going to have you identifying advantages before you are identifying entries. And this plan is a stepping stone in your learning journey. This is not the end of the road. My buddy Ron always says the high probability trend trade is not your get-rich trade. The high probability trend trade, once you understand the concepts, opens the door for you to find your get-rich trade. So this is your stepping stone. This plan is designed to optimize your chances of success with the high probability trend trade, and it will be through simulation, study, class feedback, and continuous practice. You will be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That's an AI-generated, fancy, schmancy way of saying that when you can read your charts, you will find your trades. You will create your plan. But until you can do that, this is your simple plan for consistency. And it starts, don't fight the large chart. Guys, if the large crowd says up, if the large crowd's giving you momentum, if the large crowd is at areas that can stop the market, go with the large crowd. Sit on your hands. Do nothing. Let them tell you what you should be doing. And then you have to define your entry. Defining your entry, great entries create manageable trades, guys. Great entries reduce risk. Great entries increase profit potential. Great entries define where you need to put your stops. So you're going to go through your checklist every time and you're going to say, do I have that termination that reversed the market? It's not mandatory, but it increases the giddy up a little bit. Do I have strong triggers? Are there no termination conditions? Did I have an area for entry inside of favorable large triggers? Guys, these are the same things that I want you writing on every chart, every trade. Use the phrase strong triggers. Use the phrase no terminations or clear path. And if you type out every time my trade come from an area inside of favorable large triggers, What happens is you're defining and validating and verifying that that rule is exactly where you need to be getting in. And then once you get in, you got to do something with it. This is where the adrenaline kicks in. It's easy to get into the market. We'll do that shit all willy-nilly all day long. Rules met or not. That's half the fun, right? That gambling feeling. We don't gamble. We take statistical advantages, and we enter the market based on them. You have to manage your trades. And guys, management is difficult when you're full of adrenaline. And management can be challenging when the fear kicks in, when the greed kicks in. So in the beginning, the management plan and the KISS plan is very mechanical. It's 100% if-then, and it is designed to do two things. It's designed to have you moving your stops intelligently to protect yourself and your investment, and it's designed to get you paid. It's designed to get money into your account to build that confidence. So your management plan and the KISS plan is 100% dependent on your ability to enter the market where the market is most likely to continue, to get into the market at the area inside of favorable large triggers, because by defining this point, you know precisely where the market should not go. This is your first stop. Guys, your ATM strategy over here on the side, this is the one that tells you where your stop will be initially. It's going to be 12 ticks. This particular one, if I'm in at 66.50, 64 is 8, that's 10 ticks. It's a little less than my predetermined. So that 12 ticks isn't your stop, but rather it gives you reaction time to put your stop where the market shouldn't go. And right now, there's nothing for me to do anymore. Either I'm going to get stopped out, and that's okay. Anything that wins 70 to 80% of the time, it's obligated to lose 20 to 30% of the time. Or I'm going to get one of those reversal bars. And this reversal bar is my first stop movement. And I don't anticipate it and move my stop early. But if the reversal bar prints, my new stop is 2 ticks below it. And once again, I'm on my hands. There's nothing to do. And there's only two options. It's either going to come back and I'm going to take a tiny little loser that doesn't really sting. Who cares? 50 bucks. Whatever. Or it's going to go to my first target. This is where the KISS plan is designed to build confidence, because your first target, we're trading 2 contracts, new users, on that simulator. Your first target is only $100 away from that great entry. $100, 8 ticks in the S&P, 10 ticks in crude oil. And guys, it's not uncommon for the reversal bar in crude oil to hit your first target. And once I hit $100, that first contract comes off, it goes into my account, my sweaty palms dry up, the butterflies in my stomach go away, and I'm going to move my stop to break even. I'm going to take all of the risk off of my trade. And guys, break even isn't your best stop, but you will craft a plan tailored to your personal goals based on your ability to read the indicators. Break even gives you the confidence to remember that the only reason you're long in the first place is because of momentum and clear path, because the large chart said that you're more likely to go to the fib than not. And that break even, hands in the air, hands under your butt. You're either going to hit your second target or you're going to get stopped out break even after making $100. And guys, base hits pay bills. $100 is not a bad way to make a living 4 or 5 times during the day. But KISS plan's designed to get you paid. So your second target is only $200 away from that great entry. And if this trade goes the distance, guys, if it hits that second target, it's a $300 trade. It's $300 in your account. You're out of the market. You have no risk. There's nothing going on anymore. You've simply made money. And $300 a day, if you do one trade to completion, it goes to the second target, that's a $75,000 a year. Throw in one break even and you're at 6 figures. Guys, you don't have to be in every move. You don't have to be the first person in or the last person out. You don't have to hold for the home run every time. And you might, as you grow with the software, hold for bigger moves. That's where the spreadsheet comes in, because you're going to start looking for when you can hold for bigger moves. You're going to start understanding that with momentum and a clear path, it's more likely to go to the fib. And maybe I hold one contract for the duration, and suddenly $300 trades turn into $400 or $500 trades. You start adding contracts, getting paid on the way down, embracing the momentum. But you've got to learn the basics first. And that's what the KISS plan does. The KISS plan puts you into the market at the absolute best of the best spot, and it teaches you how to make money. It teaches you that it's okay to get paid, that it's all right to not be in the market all the time. And then once you're good at that one, you can add the 50-50 trade, that potential to break. But it's not the same trade. It's not the same rules. It's not the same management. So I always encourage you guys, get really good at that high probability trend trade, because it sets you up to be able to take the 50-50. This is designed to optimize your chances of success. And it comes from a strong top or bottom. That's a rule. So if you didn't learn that in the high probability trend trade, you run the risk of messing this up. You have to have momentum on both charts. You can't have divergence on the 5-1. The entry is similar, but it reminds you, don't get in with divergence. Divergence is a loss of momentum. I'm not going to sacrifice momentum if I already don't have a clear path. And then management is more aggressive, guys. But that's on there, and you can go through and you can learn it and you can practice it. And then finally, I want to give you one more. And this is all. When I promised you guys everything that you need to be successful, here it is in the zip file, guys. That's everything. That is Chart Reading 101, the KISS plan, the entry rules, the exit rules initially for you guys. And the one thing that you have to know before you go live, and I say before you go live because why on earth would we put the expectation to know this stuff as a brand new user? You need to know why you'll enter the trade and why you'll exit. And this is gospel truth, guys. So rules are patterns that have been proven to win more than they lose. This is your entry. If you know that you're going to flip a coin 10 times and it's been proven to win 7 or 8 out of the 10, you take the same bet every time, knowing that you're going to lose 2 to 3 of them. That's what day trading is. And then you have to know why you'll exit, guys. And your exit, if the targets aren't reached, your exit is you seeing through chart reading that your advantage is no longer present. Whether it's getting to the wrong side of the triggers, whether it's 3 divergences, maybe it's a pattern. So rules remove the emotion, guys. Rules help make it pragmatic and just mechanical. Because I know this pattern wins 70 to 80% of the time. I will take this pattern every time it sets up, and then I'll let the market do its thing, knowing that I have a statistical advantage. So if I'm in a high probability trend trade, I have the rules to enter, and I have the rules to exit. And then as I grow with the software, my exit plan may change. Once I add the 50-50, I've added more rules for entry and exit. Once I add an HVA trade, a momentum trade, a white bar trade, I'm compounding the things that I have to think about, the looks that I have to understand, the management that has to go into it. So get really good at one thing first, and it'll carry you to those other trades. And this is all in that zip file that I gave you guys. Everything that I've just shared is in that zip file. And I'm going to give you one more thing, and then we're going to take our first break, because I believe in breaks. I really do. Let me find it. This is going to come to you guys as well. The key to all of this, to everything that we talk about each and every day, guys, it's building a foundation. It's understanding the basics, and then each week compounding a little bit. And that's my new favorite word. And Marty keeps sending me Japanese words that line up with my life. It's kind of funny. But this is Kaizen. And I don't know if that's how you say it. The German in me may come out. But this is the philosophy of continuous improvement, guys. Becoming 1% better every day. I want you to not put the pressure on yourself to be a great day trader in the beginning, to rather become a proficient chart reader and get a little bit better every day until you are that great reader. So for you brand new users and for you older users coming back looking for success because you haven't found it, I blanket you with very conservative rules, guys. The recognition of advantages. I give you that solid plan that optimizes your chances of success. I keep you focused on the best of the best. So for new users, all termination conditions are bad. And not having momentum is horrible, and not getting in at the area inside of favorable large triggers is detrimental to your financial health. But that's not true. It's true for new users because I want you to succeed more than you fail. I want you to stick it out. I want you to learn the basics and grow from it. But the more experience you have, the better you are at chart reading. You'll begin to understand when maybe you could trade without that best momentum, or possibly taking a trade into that line makes sense because there's so many advantages supporting it. The more time you spend with it, the more you'll see, and that's what opens doors for you. So you've got to learn the process that yields the results. Guys, the market doesn't care about your position. It's not concerned with your mortgage payment or that new Porsche that you want. The market's just going to do what it does, and it has a memory, and we've cracked the code on the memory. So we can take advantage of what it does if you keep it basic. Guys, if you're okay not finding all the trades and just find your trades, what you're going to find is there's an extraordinary level of success to be had rapidly. I've had people use the KISS plan and fund those prop firms in their first 30 days with Nexgen by keeping it simple. So question everything. Mark, you said this, I want to challenge you. Mark, you said this, I don't understand it. Mark, you said this, I need you to go deeper into it because I don't think I'm grasping the concept. Guys, this is what makes the class amazing. There's no questions that are off limits. There's no charts that I don't want to see. I just want you to tell me why you did it. But give yourself a little grace. This is for my amazing wife. Give yourself a little grace, guys. You're new. It's okay to be new. And that's it. That's my first hour. Every day we talk about pinpointing an entry. Every day we commit a full hour to defining where the market is most likely to continue. And then we're going to get into the second hours, guys. We're going to get into the second hour where we're going to talk about what's happening live. No momentum directly in determinations. Absolutely no long trades, right? We're going to look at a couple different markets. There's odds favorable with the potential to break. It had one of those little tails with that potential to break. Ooh, but maybe that's not my best look. Maybe that wasn't my trade. Maybe it was your trade. I don't know. But guys, this is what we're going to do. We're going to go back and we're going to look at your charts. We're going to talk about what you did. And you're going to talk about what you did. You're going to identify momentum and path. You're going to show me your entry and you're going to say, Mark, check it out. Was my momentum read correct? Was my path really clear? Was there a better way to enter the market? Was there a lower risk entry? Was there a higher profit? Every picture that you drop into this room, I want to know what you did. This is an educational room, which means every picture, no matter what type of trade, I'm going to talk about momentum, path, and entry. And if it's one of those trades that don't fit the high probability trend trade rules, we're going to talk about how freaking brilliant you are using these very basic concepts to capitalize, to get paid, or where maybe the omission of one of these advantages kind of took away your success. So guys, that's what the next 2 hours is going to be. The classroom is good. The classroom is great when you participate. Your education rockets when you participate. So I'm going to go take 5 minutes. I'm going to run a lap, scratch the dog behind the ears. When I come back, we're going to look at your charts. We're going to see what you did. So guys, go refill your water and toast a bagel real quick. I'll see you in 3 or 4 or 5 minutes, something like that. Howard, does anyone have any questions as we get into it? I'm going to scroll up to the top. We're going to start looking at some pictures that you guys posted and see what's going on. And I'm going to go back. This is Christmas Eve, but we got a couple, and might as well talk about them, right? This is Andy talking about higher highs and higher lows and terminations and things rolling. And Andy, you went to take a long trade, but you didn't take it from an area, and your triggers didn't agree, and it kind of removed that advantage a little bit. You didn't have momentum. And guys, these become difficult, and that's kind of that waiting point. That's that, oh man, everything's not perfect. Let me wait for it to be perfect, because once it is, it gets so much easier. And that's one of the reasons why we talk so much about advantages, why we talk so much about getting into the market where the market is most likely to continue, having that momentum. Because the more you have these advantages, the easier the trades become. Gary's pointing out terminations, and when the market reaches an area and things roll, there's opportunities the other direction. And Gary, you did a great job catching that one on the way down. And then Dave, termination reverses the market. Dave knows the power of this. Edge trades are risky if not done going down, and that's true. And you get in and it doesn't quite go, and you get in and it doesn't quite go. And then it starts to go, and then there's the easy one. And one of the most dangerous things, I love this though, is Mark says in class, areas inside of favorable large triggers. This was the line in the sand, any more back and new lows. And that was perfect. What a beautiful entry. And you even had a third chart that lined up with it. And guys, I'm telling you, you're gonna hear me in your head, and you're gonna hear me because I say the same thing every day. No, not yet, Wayne. Odds favorable, everything down, potential to break, area inside of favorable large triggers. It's a recipe that works. It's a recipe that's consistent. It's a recipe that has been proven time and time again to win more than it loses, guys. Your job is to just learn to trust that path. Andy, everything says down, odds favorable momentum, clear path, area inside of triggers, and then 3 divergences is a pattern. 3 divergences is a pattern, and it's in the, it's in the user guide. If you go to termination conditions, guys, this is one that I don't talk about in the very beginning, but there is a pattern. There it is. 3 divergences in the same price range may terminate the trend. And all divergence is a loss of momentum. And when it happens 3 times in the same area, that loss of momentum may be a changer. And this is the only time when there's a termination condition without a line, is 3 divergences in the same price range. Whether it's a low or a high, it just means no more shorts, no more longs. And if you look at Andy's trade, 3 divergences off the low, even with odds favorable and a clear path, was enough to push it up. So great recognition, great understanding, and using those patterns to your advantage, guys. All it is patterns. All right, and then Wayne, here we go. And Wayne says, fun one. I'm really finding my groove. Doing just 2 types of trades. Stop trying to find all the trades. Pretty easy to hit $1,000 a day. I agree. I have 1 trade in my trading plan. You've got twice as many as me, Wayne. But let's check it out. So the first one is a short, and that short's coming in right off the mid-band, right at the triggers, and it just didn't work. It fit the rules. I love everything about the trade. Large chart said down, large chart had a clear path. You were at the tail end of momentum. The entry is smart, and it just didn't go. And guys, that's a part of trading. Taking losses is a normal part of a positive equity curve. You have to be okay with it. And then I'm going to do large chart, small chart, Wayne. So price reaches Fibonacci resistance. Everything is down below it. This is an area that may stop the market. Wayne doesn't sell it on the way up, but he says, okay, if it does stop the market and it starts heading down, I'm going to go down with it. And that's exactly what you did. You sold it. And you said, it's not perfect. I'm just going to get paid. And it's beautiful. And then there's a divergence. There's a divergence. There's a divergence. You have weak triggers. The trend has changed. You're at a termination condition. And you said, look at this. I'm going to buy it and take it up to trouble. And that's exactly what you did. Short little snippets. Easy peasy. And then it pulls back. And this is where I say you may find a way to take chances. Directly into a termination condition. 100% area that may stop the forward progress of the market. Fits the rules. I could teach a class. And Wayne says, but Mark, check it out. I had a termination that reversed the market. I have odds favorable momentum. I have an area. It's right at triggers. And I have room to go back and retest it with all this momentum. I'm going to retest it. And Wayne, I love the trade. Rule number 2 is so far out the window, but all the other advantages stacked give you the opportunity to take quick profits. And if that $2,000 number off to the side is any indication, you, my friend, have found your groove. Great job. Guys, one trend trade in the whole thing. But I can tell you that Wayne learned the trend trade, and that's what set him up to find his trade. So really nice trading, Wayne. All right, Rob, let's see what you got. Boom, 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 boom. Odds favorable momentum, nothing in the way, and you get in on the way down with momentum, and you know that momentum can end quickly, and you get out. Rob, I love it. And Rob, can we point out something? Let me see what your next trade looks like. Okay, so I do want to point out something, guys. You didn't share this one. Rob, would it be safe to say that you didn't share this one because it didn't win? And that's okay, guys. You're never obligated to post anything in the room. But here everything says up, the triggers are up, and you take the short trade, and you lose, I'm assuming. Because there's your entry, and your stop is somewhere up here. And that's okay, but this is where the good stuff comes into play. Because we talk about it, and you learn how to miss this one. You learn how to not take this one. And I want to show you the difference. Going short with everything up results in a loser. Going short with everything down, easy winner. And you've got to begin to put these together. You've got to look at these when they happen. And man, you've got to go back and take a picture and said, I'm fighting everything and I lost. I'm with everything and I won. And life is great. Getting a good price on the pullback was the difference in making money and jumping in. Right on. Well, the one thing you did too, Wayne, and I don't know if you realized this. Maybe you did, maybe you didn't. Here, you're left of small triggers that are up, and the market went up. Here, you're left of small triggers that are going down, and the market went down. Here, you're left of small triggers going up, it went up. And here you get to the other side of the triggers going up, and it goes up. And there's a huge lesson there. These are momentum indicators. And if your price bars are left of them, it's going up until it goes the other way. So, good stuff. Rob, does that make sense on yours? I love this trade. I love everything about it. You're missing synthetic triggers, by the way. But it's this subtle little difference. Fight, lose, go with the flow, win. I love it. Great pictures, man. And then on this one, there it is again. Going with the flow, down it goes. And going with the flow, up it goes. You're giving yourself this huge advantage of trading with that momentum, and you didn't have a clear path on either. You had the potential to break on both. And you did it well. Nice job, Rob. Taking that momentum and finding a way to capitalize. Isn't that so much easier? Trading with momentum as opposed to fighting it. These are the little lessons that we start to stick in our brains. And I'm telling you guys, I'm no different than any of you. I've had to stick these lessons in my brain as well. I've taken that trade. Nicely done, Rob. It's going to be a new year. I love it. All right, Andy Man. Is the area broken is my best New Year's resolution. I like that. Do I have a clear path as your New Year's resolution? That's what you're working on. So let's see what happens here. Do you know why, Rob? Oh, can we talk about that? Then Andy will come back to yours. Guys, Rob said today my trades are lasting less than 30 seconds. Like a teenage boy. Trading with momentum. Momentum pushes the market. Trading with momentum. Trading with momentum. Trading with momentum. Rob, it's hard to stop a freight train, right? I'm glad you said that. That's very real, guys. When you're in the right trade, it doesn't take a long time. Great job. That's a good observation. So Andy, this is one we talked about this morning. Strong bottom, odds favorable, not a clear path. Divergence highs count, potential to break. Perfect pullback to the mid-band inside. Target met on the first one, stopped out on the second with some profit. Great job, Andy. This is the same one that we circled together as a classroom. That's all right. That's not dumb. Guys, the divergence highs and lows are the most ignored termination condition in the history of termination conditions. So since we're almost out of pictures, let's talk about why. And I made this picture for somebody probably a year and a half ago. This is how common it is, guys. So terminations are those Fibonacci-based indicators that may reverse the market. And there's a list of them. Blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1, cyan divergence lows, and magenta divergence highs. The divergence lines are the most ignored, guys. The two most forgotten, always. With some strength backing your luck. Andy, that's today's theme, it seems. Momentum carries the market. Momentum covers mistakes. Guys, anytime the market has a divergence high or low, that line represents a very specific point, an exact number, where not only could the in-control forces, like buyers pushing up or sellers pushing down, not push any further, but they also lost momentum. They had their momentum stolen, guys, and it's a line in the sand. And very often, if the buyers get stopped and divergence is present, they're going to go try to retest. They're going to go try to break through it. But that's why they're termination conditions, because those lines in the sand can definitely ruin a good time. And let's see if crude oil has a pretty example of it. Buyers were in control, sellers stole their momentum and it pushed down. Buyers were in control, sellers stole their momentum, pushed down. Buyers tried one more time and couldn't break through, and that's where the sellers took over, and that's what we call a pivot stop out. And you see this a lot in the market. You see these pivot stop outs, you see these three divergences, and it's literally the opposing forces stealing the momentum right from the other side. Which is why this is such an important line, but it really is. It's one of the most ignored lines. But great entry, out at trouble, not holding. Really great trading, Andy. Ron says the market's a little dicey, so bum, bum, bum. Let's see what a little dicey does for Ron. Ron says, check it out. Termination condition, once again. Termination condition, it doesn't reverse the market, but notice that there's absolutely no momentum to the upside. Does everybody see that? Three divergences in the same price range may terminate the trend. Divergence high may terminate the trend. That pivot stop out may terminate the trend. Weak triggers, it's hard for it to push up. Ron says, I am a chart reader extraordinaire. After that third divergence, I'm going to catch it. And then Wayne, do you see it? Left of the small triggers, and he takes it all the way down to the mid-band where the market may continue back up. Guys, this is expert chart reading. This is an amazing opportunity, and this is what I want you to recognize. This is 3 points in the S&P. That is $150. Hold on, 3 points. Stupid math. That's about $150. Fast. 957, 957, 957. This was less than 60 seconds. $150. Ron is now a high-price lawyer. Good job. All right, Miss Cindy. Everything says down. The momentum is strong. It's coming from a termination. And you said, hey, Mark, check it out. Price did not reach Fibonacci support yet. Therefore, my path is clear. Do all of my new users see that? When she gets in, price had not reached Fibonacci support. But market's close. Price didn't reach. That's the rule. Market comes back, and Cindy enters at a mid-band inside of triggers with odds favorable momentum and a clear path. She knows where her stop goes, and look at this. Once it goes down, she has virtually no risk. 2 ticks, that's $10 in the NASDAQ. She gets out at trouble, 4 contracts, and she says, with all this momentum, let's see if it breaks. Guys, I want to talk about her management as well. 3 contracts come off at the area where the market may bounce, where the market may stop, where a reversal could potentially happen. Cindy is dedicated to getting paid. That's her job as a day trader. But she says, I've got 4 contracts, Mark. Let's let one of them run. It was supposed to be at the magenta, but price accelerated so fast. You actually did get out at the magenta, I think. Actually, it got you out below. Because your magenta line... Oh, no, it got you at 09. It just went too fast. That's what happens when you're in the right side. That's what happens when there's momentum. Rob made the same comment about how fast his trades are going. Guys, with this look, it's hard to stop a market. Cindy, this is absolutely beautiful trading. I love your entry. You're showing such great patience on your entries now. All right, strong triggers. Can we talk about something funny? Hold on. Strong triggers. Termination, entry. Here you talk about the triggers. No, you're good. Directly into a termination condition. Would you agree? 100% into a fib that could stop the market. And some of you are going, well, Cindy shouldn't have taken the trade. Cindy can't trade into a termination. Guys, Cindy can do whatever the heck she wants. She's Cindy. With this level of momentum coming from the termination, every chart agrees with up and up strong. Cindy says, check it out. I'll get in at the fib inside of triggers, and we'll see if all that momentum carries me to the next area. And sure enough, it does. It's hard to stop that freight train. Absolutely beautiful trading again, Cindy. Your patience on entries is awesome. And I know that we talked a lot about that, guys, and that's one of the things that we do here. And there's nothing magical about what I do. I just annoy the hell out of you until you take better entries. And I think that's what I did to Cindy here. Because remember, this used to be your entry here. And then you had to sit through all of this. And now, oh my gosh, you get in at the high freaking tick? Absolutely outstanding. And guys, here's the saddest thing that I ever say in this classroom. I'm out of pictures. I don't have any. I don't have any more pictures. So the S&P is directly into a divergence high, isn't it? None of the triggers are broken. Did anybody go short into Fibonacci support hoping it would break? Does everybody see how this is the rules textbook? Price reaches the area, triggers are above, don't go short. Let's talk about how rules keep you safe. Look at this one though. Potential to break and it didn't. Oh man. Support. Support breaks, resistance behaves as support, right up to the termination condition where you get the bigger, stronger retracement. Termination, 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 egads and little fishes. It's the same patterns all day long. It's the same look. It's the same idea. If price reaches an area and the triggers don't break, it's okay to not take the trade in. You don't have to hope. You're better than that. You have Nexgen. Pretty cool. So guys, what do you want to talk about? We've got an hour and a half to fill. Here's an old one you hate to see me without. I appreciate that, Ron. Whoops. Let me open that up. All right, momentum. Ron makes the choice with that level of momentum. I'll let it get below the trouble, and I'll take it to trouble. Absolutely perfect. Momentum and path. And then I'll wait and see what happens. And if it keeps going down, I'll keep going down with it. Telling you guys, you don't have to hit every trade. You don't have to be in every move. Someone help me out with math. What's 100 times 4? Anybody? I stink at math, guys. I was an English lit major. That's 400. 100 times 4. Okay, cool. I thought so. Let me see something. So you're telling me that if I make $100 4 times a day, I can make 6 figures. I can make $100,000 a year based on a couple base hits? Is there any truth to that? I mean, that's it. 252 trading days. Guys, this is where waiting for the best instead of trying to catch all of it pays dividends. So let's see what you did, Gary. Both triggers have crossed over, so number 3 would be the first entry for shorts. Directly into fibs. Additional opportunities. Pull back to the mid-band. Divergence with a pivot from space. Loss of momentum, no trades. Resumption of the downtrend. I love it. So what Gary's doing here is he's doing weekend study. He's saying, check it out. There's a high. I'll start looking to go the other way. And then, Gary, I like the use of market structure. And this is something that I've studied only recently. Talking about the idea that when the lows get lower than the previous, when the highs get lower than the previous, market structure dictates, hey, we're in a downtrend now. And you just keep looking for opportunities to go short. And then even though there's this huge retracement, you recognize that it's still a downtrend and you look for your opportunities. And I love it. And then here we go. Market structure, there's a potential bottom, but it's still a lower. And you find an opportunity, resumption of downtrend. Perfect. Guys, these are the things that aren't next gen. These are the things that are a little bit next level. They're a little different. People have been using them for years. I'm learning market structure. My trading plan relies heavily on it. And I use the Nexgen trend trade with the market structure. And Gary, I think that's awesome study. And does everybody see that he didn't take a trade? What he did is he said, hey, this is what it looks like when there's opportunities for me. This is what my chart's going to look like when I need to be going short. This is what my chart's going to look like when I need to stop going short. This is what my chart looks like when it tells me that I'm done with longs and it's time for shorts. And guys, not one trade in there, but a truckload of information. Just get on base. I feel like we say this a lot in the room. Just get on base. Have you guys seen Moneyball? He gets on base. He can get on base. Why would I want him? He doesn't hit home runs because he gets on base. What happens if you get on base 4 times? You just hit a home run. Guys, you don't have to trade into termination conditions. to be successful with the software. You don't have to trade without momentum to be successful with the software. You can keep it so stinking basic that it becomes easy, that it becomes effortless. That's my goal. That's my hope. That's my wish. And guys, I've taught my wife to trade. And you know what I taught her? This. Because it eliminates the need for pullbacks to areas inside of favorable large triggers. But I taught her the first one first. I taught her to recognize momentum, to understand termination conditions so that she could capitalize beyond. Did the same thing with Irish MKC. You'll find your way, guys. You'll find your path. But it all stems from momentum and clear path. Woot woot. Shout out in the room. What do you guys want to talk about? I'm all out of smart stuff. I mean, I can go through, I've got a million pictures. I can flap my gums for an hour and a half. I've done it before. I can do it again. Let's see. Do. How about this? This is a good one. I want to be rich today. It's not how it works. Start simulation. And guys, this picture has been a part of Nexgen for as long as I can remember. Start simulation, education, 2 micro ES contracts. Did you guys know that there's a micro that is 1/10 the size of the mini, which means that every tick is only worth $1.25? It's not a way to get rich, guys, but it's a great way to put a little pressure on yourself and get to the point to where you can make $40 a day on the micro. That's the equivalent of making $400 a day on the big one, guys. If you start with an $800 balance and you do 2 contracts and you make $40 a day, guys, at the end of the month, that $800 is up to $2,400. Can you believe that on a $1.25 tick value, you can make $1,600 at only $40 a day? 2 contracts. So that's 80 total. And then do it for another month and prove that you're consistent and bump it up to 4,000. And then do it another month and really cement what it is you're looking for. Believe in it. And now you're up to like 5,600, right? And you say, all right, let's go to the big leagues. Let's trade that mini. Let's make it $12.50 instead of $1.25, guys. And if you make $400 a day, right? Or $400 a contract, it just grows. Force it. The same trade over and over. Let the profits grow, guys. Prove your plan. And that's where prop firms come in. That's where the Nexgen prop firm is going to come in. And man, we're so close. This is the dummy page. It may not still be up. But you get these prop firms that allow you to practice your plan. You get these prop firms where you can control $50,000 for $50. All you have to do is prove that you're consistent, guys. And you come to this room and you work with me, you're going to find yourself consistent and profitable, most likely, potentially. As soon as it's ready, Rob. Most of the programmers got sick over the holidays. Everybody got sick over the holidays. John Novak and his whole family got sick over the holidays. I had corona over the holidays. The programmers weren't immune either. But they're close. You got pneumonia. Claire, you too? Yeah. Wayne, I'm still sucking wind. I spent 4 days straight on the couch. Felt like the biggest bum. I don't do well sitting still. But you gotta let your body rest. So I'm sorry you guys got sick. 3 different antibiotics cleared it up. By the time I realized what I was up against, it was too late for anything, so I just had to ride it out. Guys, see the termination condition creating a bounce? Pretty amazing, right? But as soon as it's ready, Rob, so we've got testing going on. We're building up on TradingView, and John Novak has started creating trigger lines and Fibonacci and one-to-ones and divergences are all a part of an indicators package that he's putting together. And we're getting close. And that's TradingView, and they're doing all the stuff on the other stuff, and they're doing all the back end stuff on it. Can you guys hear me? Give me a Y if you can hear me. Let's see if it's me or Andy. Okay, it's Andy. Cool. If you ever can't hear, it's probably you. Because I'll ask the room. But tell me. Say, oh, hey, Mark, I can't hear. And then I'll ask the room. And if you see a whole bunch of Y's, that means that everybody can hear except you. So, Rob, we're getting close, man. It's cooties. Yeah, it is. I've got all the cooties. Fortunately, I've chosen to give them exclusively to one poor woman. Does anyone, and this is what got me. So right here, I would have to say I can't go short. And right here, I can't go short. And right here, I can't go long. And I'm looking at these and I'm like, man, how am I ever going to get paid if I can't go long, if I can't go short? And the reality is, guys, is very often it's not about the money that you're not making. It's about the money that you're not losing when your rules aren't met. And we see this a lot where you guys take the perfect trade and you make $300 and you're like, yes. And then you take the next perfect trade. You make another $300 and you're like, awesome, I'm up $600. Clearly I'm invincible. I'm going to take this next one without momentum. And you give back 200 of it. And then you're down to 400. And you're like, well, clearly the market doesn't realize what a big deal I am. Let me trade into this termination condition. And I'll hold it because it has to break. And now you're down to $200, right? And you're like, well, shit, I'll fudge my entry because I have momentum and without the clear path. And suddenly you're at negative 100. And you're looking at your P&L and you're like, how am I down $100? I took two perfect trades. I took two perfect trend trades, and now I'm down $100. And guys, it's not the winners that I think bump up the P&L. It's the avoidance. It's the avoidable losers that you don't take. It's the rules breaking losers that you don't take. It's not donating your money to the market, right? You're like, oh, look, termination condition held. Let me just go long arbitrarily because now it has to go up, right? And now it probably will just to prove me wrong. Even though the trend is down, even though the triggers are down, guys, when you start breaking rules, whoops, I just broke my ninja. When you start breaking rules, what happens is you crash your Ninja Trader, is you start relying on luck rather than statistics. You start relying on hope rather than patterns. And man, it's the people that do nothing. It's the people that don't take the trades. It's the people that sit on their hands. These are the people that are finding the most success in most cases, in my experience. The people that are comfortable not being active are the people that tend to find the best results. And if you wait just a minute, well, you may find your opportunity. All right, let me go through the archives. Let me see if I can find some stuff to talk about. Can you guys hear me? Let me show you how old Nexgen's plan is. I'm going to show you two pictures. This is the entire plan in one picture, guys. Define your termination conditions. Make sure you're not trading into them or make sure that you're trading from them. And then there is an opportunity straight off of those key areas called the high volume area trade, which uses another chart. So you've got to be good at the first two charts. And this is your first opportunity short. And there's a couple ways to capture this. And then if everything is strong, you take a trend trade. And if you reach a fib, if you reach a termination, you do nothing and you wait for the reaction. If it breaks, you go back to looking for trend trades. If it rolls, you go looking for the opportunity the other way. And guys, this is it. You're going to go move snow around? Ugh, have fun. Glad you met your goals. We were 27 this morning. That's as close to winter as I like to get. Guys, this hasn't changed in as long as Nexgen has been a thing. This is from 2004. Define your termination condition, let it roll, look for an opportunity. That's from 2004. There's your momentum trade from 2004. There's your trend trade from 2004. This is what people used to have to look at. You guys have it way easier than the people did in 2004. So it's the same stuff, guys. Termination, let it roll, let it break, look for an opportunity. We've been teaching the same thing for 27 years, helping people find success. This is one of my favorites. This is from a gentleman. If you guys spend any time in the traders chat room, you've seen this guy, you've looked at his trades, you've wondered what the hell he's doing. When he started with Nexgen 18, 19 years ago, he realized that rules were going to be the basis of his success. That his ability to follow a plan was going to be the key to his success. And that hasn't changed in 20 years, guys. So he created penalty box rules. You're going to go do some study. I like it, Ron. Have a good one. Take the golf cart to the beach and practice doing nothing. Have fun with that. Are you guys not iced in? Everything above South Carolina was getting ice and snow. Nice, Ron. Enjoy it. Gary, shame on you for still being there. Not really. I don't know how you guys do it. I don't know how you guys do it. We left Chicago in '79 after a blizzard. My dad's like, never again. All right, guys. So missing a good entry. David. Missing a good entry. This gentleman would force himself to stand up and walk away for a minute. Absolutely no trading for a minute after missing a good entry. Entering late was a 2-minute violation. Exiting for no reason was a 3-minute violation. Arbitrary stop movement was a 5-minute. Exiting late, giving up profit, 7. Trading against an area, 15 minutes. Trading against direction, 10 minutes. Guys, you've got to be this strict with yourself. You've got to remind yourself that the difference between success and failure for most traders is the adherence to rules, having advantages. Commit to it. Talk to yourself about it. Holy crap, I don't have a clear path. This isn't my best of the best. There's one of those Nexgen momentum trades. Irish MKC, did you find a short there? Did you make some money? I know that fits your plan. That fits Ron's plan. David, you're killing me. 1485. One of the other things that happens, guys, is the more you post in the room, the more I recognize your plan. Watching a different chart, the more I recognize your rules, the more I understand what it is you're looking for. And one of the great things about this classroom is I begin to hold you accountable for it. The same way I recognize that Cindy's entries were better. The same way I tell Ron, hey, this doesn't fit your plan. Guys, the more you post in this room, the more we get to work together. And I think that that's a pretty outstanding thing. I am going to open up another chart. We'll get the S&P back up since I crashed it. It looks like I'm still in a trade on the S&P from the crash. Whoops. Gotta love simulator. Should probably close that out. And now I've got hanging orders. There we go. Still have hanging orders. As this loads up, let's see. David the Master, Anything you want to talk about? Nanda, anything you'd like to talk about? Hamid, Claire, Muser, Kristen, Clara, Rob, Dave, Vad, Bree, Andy, Jonathan, Mark, Izzy, Troy, Sammy J. Ra, Jeffrey, Erla, John, Gary, Mike, Jen, David, Dab Chain, Paul Pratt, good to see you in here. Long time. Jim H, Terry, Mike, Lava Lamp, yo hippie you, Miss Anna, Joe, Joel, Cam. Cam, what do you want to talk about? Charlotte, Rick Roll? Rick and Roll, not Rick Roll. Dave? Can you guys hear me? We good? We there? I don't know. There's your S&P. How's that for shenanigans and garbage? Mark, I don't have momentum or a clear path. What should I do? Follow your rules. Group-wide holiday hangover. Yeah, it might be. It might be. Anybody get anything cool for Christmas? Wayne, did you get a new hot rod? Nope, that's too bad. Did a bit of flying. Very nice. Very nice. I got one round of golf in. That was it. Couple of runs to the driving range, but pretty mellow. It was good. The best gift ever, though. So those of you that have been with me for a while know that my wife and I traveled the country for a couple years, just seeing all the different stuff. Her nursing, me tattooing, and she put together a book for me. All of the pictures, all of the different national parks and landmarks and places we went. It was a lot of fun. Really cool. I am living a charmed life. You know what? I didn't, Jen. I did not get any new tattoos. I gave a couple new tattoos, but I didn't get any. I need one. You want to go get tattooed? Fly into Austin. Let's go get tattooed. I'm ready. Cindy, I know you want some. You have none? Oh. That's all right. I'll like you anyway. Zero, Wayne. Tattoos aren't for everybody. That's funny. That's what we're talking about. I am no longer in Frisco, Troy. My wife and I moved back to, we're just north of Austin in a city called Liberty Hill. We got here last week of November. So our kids are here. Our kids have a house together here in North Austin, and so we wanted to be closer to the kids. We got all of our traveling done. We're gonna set some roots out here in the hill country. Stinks though, there's not nearly as many golf courses near me unless I want to join a country club, and I just don't want to do that. You fly into Georgetown, Wayne? I am just west of Georgetown. Like, Georgetown is literally a 12-minute drive from where I'm at in Liberty Hill. I like it. Georgetown has grown a lot. They're trying to break out, aren't they? All right, guys, I'm going to go take 5 minutes. I'm going to walk around, find a snack. Last hour, help me out. Think about things you want some help with. Post it in the room, post some pictures. Doesn't even have to be a trade. Tell me what you want to talk about. So when I get back, we'll talk about what you guys want to do. I'll see you in a few minutes. All right, guys, coming back in. I didn't mute YouTube, so they're going to hear me clearing my throat. Have you guys ever had that hanging order down here? And you're like, man, how do I get rid of that? So I'm going to show you how to get rid of that. And there's a couple things that you have to do. Not that big of a deal. Good morning, Morgan. So one of the things is you're eventually going to have to close everything out. So close your workspaces, and then you're going to go to Tools and Database Management, and you're going to have to reset. Whoop, you got to disconnect first. That's my bad. So you're going to go to your connections, and you're going to disconnect. You have 2 active orders. Do I really want to disconnect? I most certainly do. That's what I want to get rid of. Go to your database management from Tools. You're going to reset, and you're going to repair. And then once you do that, you're going to close out, and then you're going to bring it back up. And they should be gone. And that is the only way I've ever learned how to do it. The easiest way to do it. Morgan, good to have you back. Are you engaged? Congratulations, man. I was thinking about that the other day. Then we'll get that moving again. And then there's the picture. Jen, you just turned off Ninja. There's crude into support. So we'll open up our S&P again, and we'll see if that fixed it. Hopefully it did. Look at that, it didn't work. Son of a gun. Oh well. That's weird, that usually does it. And it didn't this time. There we go. Since it was simulator, I just reset my simulator, but I was trying to show you guys the way to do it if you're live. Look at that termination condition. And look what it did. Look how it pushed back below. Guys, what would you like to talk about? Here you go. I'll share a picture. So John Novak has been working with programmers, building market flow, all sorts of good stuff for TradingView. Yeah, ES is rubbish at the moment. So this is TradingView, not NinjaTrader. This is very much what it's going to look like on the new platform. But he has been building. So he's working tirelessly to get you guys up and running. Hopefully we'll be beta testing soon. Should be fun. I'm excited. I'm ready. His TradingView looks way better than my TradingView. My TradingView I set up a little different. I've got my trigger lines, I've got my one-to-ones, I've got my divergences, and then I use MACDs. There's my wife's crypto account. Going up, Ethereum. It's cool because once you guys know the basic patterns, you can trade anything. You can trade any time frame. You can find opportunities everywhere. It's a lot of fun. No, so Claire, TradingView they have like 50 million users. Um, so when the prop firm begins, when the funding company begins, one of our partners is AMP Futures, AMP Trading. John's got a 20 plus year relationship with them. So John has been working tirelessly to make Nexgen available on TradingView and writing in the coding and going. But he's also building his own platform, which is a browser-based platform, which will be very much like this. This is TradingView. You'll have multiple charts. You'll have your indicators. Let me see if I can. And it'll look. This doesn't have all of the indicators. So we've been going through and we've been writing these things in. Well, John has. I haven't because I'm not that smart. But one-to-ones and MACDs and divergence and trigger lines and trend bands and all those things that make Nexgen is being coded for this. But when John's platform, when the Nexgen browser version comes up, it's going to be similar to this, but it's going to look more like NinjaTrader 8. But the one thing is that the patterns are the patterns, the platforms are the platforms, and the rules are the rules, and all those things that you need it to be. Whether it is NinjaTrader, we won't stop teaching because the patterns are the same. If you want to use the funding company, though, you'll need the Nexgen platform. NinjaTrader 8 won't be one of the platforms available, I believe. But you can do what you're doing for sure, and nobody has to get off of NinjaTrader 8. And Gary asked, he's like, so will you stop teaching NinjaTrader 8? I don't teach NinjaTrader 8. I teach Nexgen. I teach the Nexgen high probability trend trade. We talk about the Nexgen high volume area trade. So I hope that was an okay answer. A little roundabout, but you'll be fine. There will be something Nexgen for you. And you'll make the decision on which platform you'd like to be on. All right. Talk to me, guys. Talk to me, Goose. ES has been declared rubbish by Jen. I don't disagree. Crude oil, right into a termination condition. Well, he's not going to just suddenly tell everybody, Dave, that you can't use NinjaTrader. The funding company won't use NinjaTrader, is my understanding. But again, guys, don't force me into talking about things that I'm like. My stuff comes from conversations with John, not necessarily. I'm not talking to traders. I'm not a part of his business plan. But the software will still load on NinjaTrader. It'll still be available on NinjaTrader. You can still use NinjaTrader. If you want to use the Nexgen prop firm, NinjaTrader I don't believe will be an option. Even for me. Even for me. Not that I would use the Nexgen prop firm, but I'm now guy, could I know how to read the candle? New guy. I don't think we read candles so much, David. What we do is we're looking for patterns. Probably Claire, give me 1 second. So welcome first, David. It's good to have you here. So the one thing that we do, and I know that people are like, oh, there's a candle pattern, right? So what we do here at Nexgen, and the way that it works, is we talk about three patterns, three simple patterns, and I teach them every day, the exact same thing, every day, the exact same look. So there's a look on your chart that provides momentum, and that's rule number one. And we talk about it, we teach it, I show it, how to study it, and I even give you this cool Excel spreadsheet with almost 60 pictures of what it looks like to have rule number one, those strong triggers. And then we talk about termination conditions that we call them, and those are areas on the large chart that can stop the market. And we go through and we talk about it, how to study it, how to look at it. And on that same spreadsheet that I give you guys, there's almost 80 pictures, I think, of termination conditions. And then we go and we break down the entry. So what I'm doing, David, in this classroom every morning, the first hour is exactly the same. It's nothing more than teaching you to recognize a couple advantages that repeat themselves every day in the market, that provide a trend trade that typically wins 70 to 80%. It's not the traditional look where you're saying, oh, I need a candle, I need a flag, I need a bullish, a bearish, head, shoulders, all that sort of stuff. It's literally three simple rules that happen to create this pattern, and I teach you how to get in at the right spot, at the area with the highest chance of success. So as the brand new user, the one thing that I really encourage is keep it focused, be in that first hour. And my promise every day is that I'll give you everything that you need to be successful with the software. But the easiest path is understanding momentum and termination conditions. Understanding the rules that create them. And then once you understand these two concepts, and most people get them in a couple days, you begin to see more and more and more in the market. You begin to see more opportunities. And you know exactly where there could be trouble. You know exactly where the market has the potential to reverse. You know exactly when the market is pushing strong enough to get to those next areas. So I know you're brand new, and the one thing that I tell all my new users is that it really does, it feels like drinking from a fire hose in the beginning. Like that's kind of where we're at, because it feels like there's a lot coming at you. But the reality is that we break it down into its absolute most basic terms. So David, you can go back to the YouTube channel, and I always encourage new users to do this. Go to the Nexgen YouTube channel, go to the live. That's 12:20, so that's a good one right there. So let me get you a link. And this will set you up to get absolutely even more out of tomorrow. Go watch the first hour of my classroom and listen to those first three rules being explained, and understand that it really is, it's repetition that creates the recognition. It's hearing the same thing over and over that's going to set you up to be right where you need to be. I hope that was helpful. Claire, guess what? I have to do the same thing. I have to do the same thing to see the divergence potential. So I don't know a way around it. On the large chart, it doesn't matter. On the small chart, well, actually, no, I can see it there. Maybe it's a NASDAQ thing, because on my NASDAQ chart, I can't see it. Let me open up NASDAQ real quick, and we'll see if we can see it on there. And then the reversal bar marker, sometimes you have to click your chart and hit F5 and rewrite the Ninja script to make sure that it gets on there. And then dab chain, This is a hard chart to read, but we're going to see what we can do. Market showing hard up bias, buy at the blue line, out 1 at purple, leave 1 for fun, close trade before the retracement, buy 2 at the pullback, close 2 at purple. I don't know what any of this means, Dab, but it looks like you're trading with trend. It looks like you're getting out at trouble. And it looks like you've done great work taking the software and really making it yours. There's those entries, termination, reverses, momentum, and you take momentum all the way up to the fib. Comes all the way back to the mid-band, large triggers don't follow, you take it up. And I'm not sure what that one was, but it goes down and didn't get you, so you're running some pretty big stops. Overall trend is up. You take it up and get out. And then you tried to go long against it. And that's a tough one because you had to sit through all of that nonsense before it finally went up. I like it. For the most part, you're going with trend and direction. Trading with momentum. David, did that make sense what I said? I know that you're new. You had to. I like it. I had to. And guys, there's NASDAQ. So yeah, Claire, same for me on this one. I can't see my divergence potential. Maybe it's just a NASDAQ thing. So David the Master, we're going to break it down and we're going to make it easy and we're going to make it simple and we're going to make it focused. And then we're going to turn a couple advantages into trades. And the first one that we talk about is the one that typically wins 70 to 80% of the time. The high probability trend trade. Claire, do me a favor. Oh, thanks, user. Go to properties and increase the right side margin number. I don't know how to do that. Axis, crosshair, grid lines, panel splitter, window. I don't see that one. User. Well, don't even educate yourself, David. Let me help. One of the things that sets Nexgen apart is I'm here every day, 15 hours every week. It's live. And my promise to you is that, I'll go look at a second, user. Is that I will beat these into your head. Momentum and clear path, momentum and clear path. I'll give you everything that you need to understand these two concepts. I'll give you a solid plan to be able to take that high probability trend trade. I'll teach you how to study it. I'll give you a place to put your study. So we're going to do it together. Don't take that burden on yourself. We'll do it together. All I need from you is just ask when you need a little help. Let me help. That's the only people that I can't fix are the people that don't give me the opportunity. All right, properties, general, font, colors, lines, window. Doing this a long time, David, and I love what I do. Where did I miss it? Chart trader, data range, scroll bar. Tab name, background image. Will you take a picture of yours and show me, Muser? Those are all of my options. After font. Right side, oh, right side margin. There we go. So let me make that 12. Thanks, man. Apply. Is there divergence potential right now? Well, now I have to wait for divergence potential. You're a rock star, Muser. Let's see if we get it. Or let me see what the number is on this one. Right side margin is 70 here. So I'm gonna do this. So Claire, here we go. Go to properties, and let's just make our right side margin match the other one. 70, and that'll get you everything that you need. User, thank you for that. And then David the Master, here's just a great example of how this community helps. There's people in here. Everyone laughs. I'm not a tech guy. I never have been. So sometimes I don't have the answer, but usually someone in here does. That's perfect. Thanks for that, Muser. Morgan, first trade of the year. Termination, white bar, pull back to the smalls that roll. Perfect freaking entry. You get paid on the way up and using that one. Awesome. Morgan, great trade. And I like the way you're using the market flow reversal bar. If it creates a down bar at the mid band, you'll exit. If it doesn't, run it up, right? Good stuff, brother. Nice. And then Claire, in regards to the reversal bar marker, go to your indicators, right click, go to indicators, go to the T3 Pro Trader Synthetic New, and then reversal bar marker 1 should be marked. If it is and you still don't see it, there's a couple things that I do. I'll right click and I'll try to reload all historical data, or I'll try to reload NinjaScript, and if those still don't work, I'll usually just rebuild a chart. That was a good looking exit, Morgan. All right, Wayne. Odds favorable into term but get paid before term. Entered above mid-band. I think you give that mid-band a lot more power than it deserves. And then out. I see what you did. Bummer, Morgan. I see what you did, Wayne. That's tough. Because you have a termination and you have a small chart that has already started down. As though this termination was going to hold. This is what I look for in instances like that. I let my small triggers roll, because then I've at least got a fighting chance. And you could take the exact same entry, and when those triggers roll, you've got a higher chance. Because if this termination condition was going to work, man, it takes momentum to get me back up to it, to get me back up to that retest. Does that make sense? Maybe just a little refinement there. And don't change your plan based on what I say, but this is just one of the things. So if I start going too deep, I let the small triggers roll. I get back into that look. But that's an aggressive trade without a doubt. I know you have a plan though. Where was your target? 38, 34? So here's the question, Morgan. Did you let a number be your target as opposed to an area? Which you may have. But let's do a lesson here. Just wasn't paying attention? Okay. Because you hit a mid-band and your large triggers were a full bar away. So this mid-band is every bit as strong as a fib at that point. Given Nanny cough drops on... Okay. All right, you get a pass for Nanny. But yeah, I think 34-ish, 33-ish, outstanding target coming off that bottom. Man, I had Corona over the holiday, so I'm feeling for you guys. The crud has been absolutely ravaging. You know, my wife's in the medical business, and all of her friends in hospitals up in Dallas, um, like the ERs are full. There's no beds. Everybody's sick. Pour one out for Mark too. Pour out a little Robitussin on the curb. Good stuff. But yeah, mid-band on these trades, that's always my target. That's always my first one. Like, that's where things could really go wrong for me. And now we have weak triggers directly into fibs. They made it. That was a hard fight, wasn't it? This is you guys seeing buyers and sellers tearing it up. Mid-band can be rough. Well, there's a time when it's a termination. You know? There's a time when the rules say that this is a termination, and it's when those large triggers don't follow. And I'm not going to lie, if my large triggers aren't a full bar away, I couldn't care less about the mid-band. It's just a squiggly line. But when these guys don't follow, that's the gap theory. That is literally textbook. When the mid-band is that one. Well, yeah, absolutely. Because it's a line on the large chart. There's times when you can say, all right, the mid-band's more likely to hold or likely to break. But yeah, there's usually something bouncy that happens there. You're absolutely right. Squabbles happen. Because there's a lot of trend traders that use that moving average. You guys want to see something cool? Let me take a picture of this. And then let me go to termination conditions. And I'm going to take this picture. And I'm going to put these next to each other. And it is the same pattern inverted. You guys see that? Right to the area, right to the area, back to the mid-band, back to the mid-band, retest the area with weak triggers, retest the area with weak triggers, and that's where the market started down, and this is where the market appears to be starting up. It's the exact same pattern. So David the Master, when I talk about we're going to learn patterns, these are the things that we're doing. These are the patterns that we're learning. These are the looks that we're committing to memory because the market repeats itself every day. The only thing that I'm 100% sure of in the market is that I never have any idea what the market's going to do. I never have any expectations to win a trade. I don't have any expectations to lose a trade. I don't have expectations for up or down. All I do is I wait for my pattern. Is I wait for my rules to be met because my rules have been proven to win more than they lose. And there's this huge disconnect between my expectations and the market, and that's what keeps me from being emotional. That's what keeps me from mourning losses and keeping me angry that the market didn't go where I thought it could go. I'm not in control of that. Neither are you. So we just recognize these patterns that say, hey, don't take the trade, or hey, it's time to take the trade, and that's all we're doing. But isn't it amazing? Look at that run down, straight from Fibonacci resistance all the way to Fibonacci support. And it's, you know exactly where this is likely to happen. And you've got momentum indicators to help you make good decisions. And I really think, and it's funny, John Novak and I talk about it all the time, it's amazing. Once you develop a little bit of trust and you learn these patterns, it's amazing the advantage that you can give yourself. And they're trying to break up now, aren't they? NASDAQ's trying to do it too, but holy termination conditions, Batman. Look at that. Welcome to the day after the holidays. And then if you look at the news, we also have FOMC on Wednesday, guys. Every FOMC day, I swear that I won't trade. And almost every FOMC day, I get sucked into it. Yeah, Wayne, it's all hydrator and water for me. Try and eat healthy. There's someone in this room. We were talking about FOMC once, and I was like, I just won't trade it anymore. And on my phone, on my calendar, I've got absolutely no live trading for me on Wednesday. I won't do it. Look at that. This is where we play if then. If I break above, if my triggers get through, if the potential is there, I'll look for an opportunity. Until that happens, guys, there's no part of me that wants to go long. There's no part of me that wants to try to hope an area breaks. I'm just going to let it break. Life is easier that way. There we go. Morgan, did you get a trade off of that? Did that one fit your rules? That look right there, I love. You're getting married now, Morgan. No aggressive stuff. Didn't take that one? All you kids. That's all right. Been off for 2 weeks. Good for you for being able to stay away for 2 weeks. I couldn't. I tried to trade during the holidays. It was catastrophic for me. Even taking the right trades. So I quit trading right after Christmas. So if I end up with momentum, I'll look for a trend trade, guys. That's the long and the short of it. If I get momentum, I'll look for the trend trade. Until that happens, I got nothing to do. Now I've got momentum. I've got the potential to break. And I've got areas inside of triggers. You guys see it? My smalls are outside of my large. It's not a lot, but they're outside. I only have the potential to break, though. It's not broken, which means that I'm in at the area inside of favorable large triggers. My stop is 4 ticks below the bottom. My first target needs to be 67. Oh, and 65, 66. 67 is $100, but I've got 2 contracts there. Let's see if we get it. How's that? Live. If I get the reversal bar, then I would move my stop. Until that happens, there's absolutely nothing to do. Here, let me put this at 200. And let me put one at 100. There we go. So we'll kiss plan it. Medium probability, only the potential to break, not a broken area. I have momentum. I don't have a clear path. I did have an area inside of triggers, and my stop is where the market should not go. Does this make sense, David? This is the trade that we talk about pretty much every morning. The only thing that we don't have is a 100% clear path because my large triggers are not above this red line. In the plan that I give out every morning, first targets are at $100, which is 8 ticks away from the entry. Second targets are $100, which is 16 ticks away from the entry on the S&P. The trading plan that you get says if you enter here, your stop goes where the market should not, and if it pushes down and hits my stop, I'm willing to take that loss. I'm willing to take that exit. But until it happens, I'm not going to do anything. I'm just going to sit here. I'm going to relax, and I'm going to wait and see what happens. I'll never be in control of the market. Does that make sense, everybody? This is not me telling you to take a trade. This is me saying this is a medium probability trade. This is a trade where that area only has the potential to break. It hasn't broken yet. This is a trade where we could pinpoint where the market is most likely to continue if it's going to continue up. Certainly not a guarantee that it will. Guys, this is day trading. And look how your small chart fluctuates right at that fib. You are literally watching the fight between buyers and sellers right at a key area. Does that make sense? They're right on top of that fib, and look how they can't seem to go up or down. Guys, one of them's going to win. One of them is going to win. I don't know who it's going to be. But if you watch those fluctuations, it'll drive you freaking nuts. Up 50, down to 25, 0, down 25. Oh my gosh. So guys, right now, buyers and sellers are trying to figure out who's going to take the win. So the plan says, if my first target is hit, then I will move to break even. If I get a reversal bar, I'll go 2 ticks below it. But our entry was so good that our first target is at our profit, is at our first profit. So if we hit 67, I automatically go break even instantly. Nothing to lose. How cool is that? Oh, there's the sellers again. Those rascally sellers. So David the Master, this is it. Every day, this is what we talk about every day. Doing nothing more than recognizing a pattern, recognizing momentum, recognizing whether it's clear or whether it only has the potential, pinpointing where the market is most likely to continue. And if this market does continue up, I want you to see something. This tail came right back to support right inside of triggers. It didn't go 4 ticks below. That's the pattern. The tail next to it, same thing, right back to support right inside. There's our reversal bar. So now I'm 2 ticks below a reversal bar. Even less risk on the trade. Doesn't guarantee a winner. But now I've reduced risk because the market has said, hey, Mark, check it out. We're going in the direction of your trade. There's our first target. And it froze, and I'm about to crash again. Damn it. I would be break even with money in the bank at this point. And it's about to kill itself. And I think I believe my ES has something corrupt in there. I'm going to have to rebuild it. Because it's not letting me work, but... Alright, sorry about that, guys. I'm going to kill Ninja Trader real quick. If it won't die, I'll kill it. Did that make sense, everybody? Did you hear how all I did was talk about whether or not my rule was met to do the next thing? My entry was defined by rules. My stop placement was defined by rules. My target was defined by rules. All right, Jay says, mid-band question. I'm working on more pics and descriptions because what I'm doing is not working. I'll send more later. I'm sorry that it's not working. Have a mid-band here, but not on the 5-1. I know the large chart is supposed to lead the way. So, Jay, 2 things that happen. You've got a large chart and a small chart, right? And they're different sizes. So, the large chart is a 13-2. The small chart is a 5-1. Your mid-band on the large chart is specific to the bar structure on the large chart. So, this moving average is based on the large chart movement. These yellow 1-to-1s, these Fibonacci 100% alternates, are based on the large chart swings. These divergences are based on the large chart momentum. Your small chart will also have fibs that are created, but it's based on the small chart moves. The yellow 1-to-1s are based on the small chart moves. The mid-band is based on the small chart moving average. So they are independent of each other without a doubt. And then one of the things that you'll see, hey look, we're still in the trade. It probably would have gotten us break even. I don't know. It's loading. And the reason we use two charts and the reason that the large chart leads the way is, let me go to this picture real quick. This is a good picture to help describe it. Nope, that's not the one I was thinking of. There it is. Are you with me, Jay? So inside of this one bar on the large chart, inside of that one bar is all of this action on the small chart. That's why you see so many fluctuations on the small chart. So here the large chart says down, and the large chart says giddy up, and the large chart says you've got room to your targets. And inside of this bar, we go in and we find all of that price action. And that's, there we go. And that's exactly what's happening here as well. We hit our first target. Let me put it so you can see the entries on here. And notice that how on the large chart, it's still up, it's still potential to break, and it's never gotten off of this one bar. On the small chart, we've gotten a pullback to the mid-band on the small chart right inside of favorable large triggers. Well, that would have been our break-even exit.
Order canceled.
My Ninja Trader's having fits. So you're letting the small chart be an entry chart. You're letting the large chart be the reason that you look for the entry on the small chart. Does that make sense, Jay? And then I absolutely have to say it, and this is for everybody. If what you're doing is not working, guys, show me what you're doing. Show me your trades. Show me your entries. Tell me why you're doing what you're doing. And I promise you, I know a fix. Because I've made every mistake that could ever be made. And over here, everything says down, you went down with it, and it worked great. And everything said down, and you went down with it, and it looks like, well, you got caught out break even. So Jay, what you need to show me is this entry. Show me that exit. Show me what you're doing, man, so we can talk about it. Because I promise you, I've seen it before, and I can help you fix whatever's broken. And this is the instance where the large chart mid-band behaves as a termination condition, but it's not a termination condition over here. Not anymore, because they're not. Went through a bunch this morning. Awesome. Let me know how I can help. Guys, I love helping. I really do. It makes me happy to help you guys get through this stuff. I have been through every emotional roller coaster you've been through. I have been through every bad entry, every mismanagement, every termination condition. I have fought trigger lines. I've traded without momentum. Guys, there's nothing that you could ever do that I haven't done 100 times over and found the solution to. Trust me on that one. Guys, we've got about another 10 minutes. Is there something you'd like to work on for 10 minutes? Is there something you'd like to see? Something you'd like to talk about? As we go into this very tail end, I'm